In 2008, Warren Buffett saw an opportunity in ConocoPhillips, one of the world's largest oil and gas companies. At the time, oil prices had been steadily rising, and the global demand for energy seemed insatiable. With a diverse portfolio of assets and a strong track record, ConocoPhillips appeared to be well positioned to capitalize on this growing market. Buffett, always on the lookout for undervalued companies with strong fundamentals, believed that ConocoPhillips fit the bill. He saw the company as a cash-generating machine with the potential to deliver substantial returns for his Berkshire Hathaway shareholders. Furthermore, the energy sector offered an attractive diversification opportunity for Berkshire Hathaway's portfolio, which at the time was heavily concentrated in financials and consumer goods. One of the key factors that drew Buffett to ConocoPhillips was its management team. Led by CEO James Mulver, the company had a reputation for being fiscally conservative and disciplined in its capital allocation. Buffett, who is known for placing a high value on strong, shareholder-friendly management, saw this as a major selling point for the investment. Another factor that likely played a role in Buffett's decision was the company's commitment to returning capital to shareholders through dividends and share repurchases. ConocoPhillips had a long history of increasing its dividend payouts, making it an attractive option for income-focused investors like Buffett. Despite the seemingly strong rationale for investing in ConocoPhillips, Buffett's timing proved to be less than ideal. Just months after he began accumulating shares, the global financial crisis hit, and the energy markets went into a tailspin. Oil prices plummeted, and the demand for energy products waned as the global economy struggled to recover from the crisis. As a result, ConocoPhillips' stock price took a nosedive, and Buffett's investment suffered massive losses. In retrospect, it became clear that Buffett had failed to account for the possibility of a sharp downturn in the energy markets, and had overestimated the stability of oil prices. This miscalculation would ultimately lead to one of the most significant setbacks of his investing career. If you found value in this video, please like and subscribe for more. Also, please join me on Patreon for daily stock ideas. Now back to the video. Part 1. Market fluctuations and challenges faced after the investment. Not long after Buffett invested in ConocoPhillips, the global financial crisis struck, causing widespread panic and upheaval in financial markets. Oil prices, which had been on an upward trajectory, suddenly plummeted, and the energy sector as a whole took a massive hit. ConocoPhillips' stock price fell sharply, and Buffett's investment quickly turned sour. As the financial crisis unfolded in 2008, the world's economies faced unprecedented challenges. The crisis hit the energy sector particularly hard, as businesses and consumers were forced to cut back on their energy consumption in response to the economic downturn. Oil prices, which had reached record highs just months before, began to plummet, and energy stocks followed suit. Warren Buffett's investment in ConocoPhillips was no exception. As the global demand for oil and gas products dropped, so too did the company's revenues and profits. ConocoPhillips' stock price fell dramatically, and Buffett's sizable investment in the company quickly turned into a significant loss for Berkshire Hathaway. Adding to the pain, the financial crisis also wreaked havoc on other sectors in which Berkshire Hathaway held substantial investments, compounding the company's overall losses. The fallout from the crisis highlighted the importance of diversification and risk management, even for an investor as experienced and successful as Buffett. In response to the deteriorating conditions in the energy market, ConocoPhillips took several steps to shore up its balance sheet and protect its shareholders. The company slashed capital expenditures, reduced its dividend, and divested non-core assets to raise cash. These moves, while necessary in the short term, also had the effect of limiting the company's growth prospects and reducing the potential return on Buffett's investment. As the global economy gradually recovered from the crisis, the energy sector began to stabilize, and oil prices slowly rebounded. ConocoPhillips' stock price recovered some of its losses, but it was clear that the investment had not lived up to Buffett's initial expectations. In a rare admission of a mistake, Buffett acknowledged that his timing on the ConocoPhillips investment had been poor, and he had not adequately accounted for the risks associated with the energy sector. Despite the disappointing outcome of his ConocoPhillips investment, Buffett remained committed to his long-term, value-oriented investing philosophy. He continued to search for undervalued companies with strong fundamentals and shareholder-friendly management, applying the lessons learned from his experience with ConocoPhillips to make more informed investment decisions in the future. Part 2. Buffett's admission of the mistake and subsequent actions. In a rare moment of self-reflection, Warren Buffett admitted that his investment in ConocoPhillips had been a mistake. He acknowledged that he had not adequately considered the impact of the volatile oil market on the company's performance, and that his decision to invest had been poorly timed. By the time it became clear that the ConocoPhillips investment had not turned out as Buffett had hoped, he began the process of unwinding his position in the company. In 2009, Berkshire Hathaway started selling its shares in ConocoPhillips, gradually reducing its stake in the company over the next several years. By 2015, Buffett had sold all remaining shares of ConocoPhillips, marking the end of his involvement with the company. Although the ConocoPhillips investment proved to be a rare misstep for the Oracle of Omaha, it also offered valuable lessons for Buffett and other investors. One of the most important takeaways from this experience was the importance of thoroughly understanding the risks associated with an investment, particularly in a sector as volatile as the energy industry. Additionally, Buffett learned the importance of considering the broader macroeconomic environment when making investment decisions, as external factors can have a significant impact on a company's performance. Despite the setback, Buffett did not allow this experience to shake his faith in his long-term, value-oriented investment philosophy. He continued to apply his well-honed strategy of identifying undervalued companies with strong fundamentals and the potential for growth. By staying true to his core principles and learning from his mistakes, Buffett demonstrated his ability to adapt and refine his approach to investing. The ConocoPhillips investment also provided a crucial reminder of the importance of diversification in an investment portfolio. By maintaining a well-diversified portfolio, investors can minimize the impact of individual investments that underperform, helping to protect their overall returns. Buffett's Berkshire Hathaway has long been a shining example of the power of diversification, with investments spread across numerous industries and asset classes. In the years following the ConocoPhillips episode, Buffett continued to make significant investments in the energy sector, including substantial stakes in other energy giants like ExxonMobil and Suncor Energy. However, Buffett's approach to these investments was more measured and cautious than it had been with ConocoPhillips, reflecting the lessons he had learned from that experience. Part 3. The long-term outcome and impact on Buffett's reputation. In the end, Warren Buffett's investment in ConocoPhillips did not result in the massive financial gain that he had hoped for. While he was able to recover some of his losses by patiently waiting for the market to rebound, the investment ultimately underperformed compared to his other, more successful endeavors. Despite this setback, Buffett's reputation as a master investor remained largely intact. His long history of market-beating returns, and his unwavering commitment to value investing principles continued to inspire confidence among his followers. The ConocoPhillips episode served as a powerful lesson in humility and the importance of continuous learning, even for someone as accomplished as Warren Buffett. Furthermore, this experience highlighted the importance of diversification in an investment portfolio. While Buffett's stake in ConocoPhillips suffered, his other investments in different sectors continued to perform well, helping to offset the losses incurred in the energy sector. This underscored the wisdom of not putting all of one's eggs in a single basket, and the value of spreading risk across various industries and asset classes. Warren Buffett's investment in ConocoPhillips serves as a fascinating case study in the world of investing. It demonstrates that even the most successful investors can make mistakes, and that no one is immune to the uncertainties and challenges of the market. However, it also showcases the importance of adhering to one's investment principles, remaining patient in the face of adversity, and learning from both successes and failures. As Warren Buffett's storied career continues to unfold, his experience with ConocoPhillips will undoubtedly remain an important chapter in his ongoing journey as one of the world's most renowned investors. Thank you so much for watching.